Hello, federal employees. This is Sierra with Plan Your Federal Retirement. Thank you for joining me on today's Follow-Up Friday, where I'll be covering the highlights and action items from this week's episode. In episode 88, Micah and our special guest, Floyd Shilanski, discussed year-end tax planning. As the year is starting to wrap up, Floyd wanted to talk about year-end tax planning. Micah asked, what are the things that we need to look at year-end to make sure that people are on track for their taxes? Floyd said that sometimes people wait until after Christmas to start doing their tax planning, but unfortunately, by that time of the year, there isn't much that we can do then. As we are meeting with clients right now, we are doing tax projections and calculations for our clients. It's amazing how many people Floyd is finding that haven't even maxed their thrift savings plans, for example. Micah adds that sometimes we have seen clients' withholdings have changed throughout the year, and now they have a major tax bill. So now is a great time to start looking at these things. Floyd brings up that, for example, Social Security, when you start it, you have to submit an additional form in order to withhold taxes. It is not automatic. This can be a big surprise on April 15th. Micah suggests that you do a tax projection and pull together statements for all of your sources of income. Look at how much you've been paid gross and how much have you already paid to the IRS. Floyd talks about the estimated quarterly payments and how they're not really specific to each quarter. Micah asks if you have max funded your thrift savings plan account. If you have room to contribute more to your thrift savings plan, consider dividing it by the remaining pay periods. And if you're 50 years young or more, you can also do a catch-up contribution. Floyd mentioned that OPM may not start it right away, so give yourself a little buffer there. Micah discussed the health savings account, HSA, and during open enrollment, consider getting a high deductible plan so that you can contribute to an HSA. If you're not currently eligible for one, consider if that makes sense for you in 2024 so that you can contribute to an HSA. Floyd talks about how this is a part of the tax planning side and looking at all aspects of your income and expenses. Can you possibly delay something until next year because your income is down? Micah contrasts this by bringing up that in 2025, our current tax laws are expiring, so you may want to consider accelerating your plans on something in order to get a more favorable tax law. Micah always talks to his clients about things ahead of time and thinking about what we can do next year in 2024. Micah mentions a flexible spending account as well and pre-funding it. People are concerned that it's a use it or lose it, but if you need classes, for example, still considering funding it a little bit so that you can get that tax deduction. Micah mentions Roth conversions and doing tax analysis. When tax laws change in 2026, what does this mean for you? What taxes will be there when you retire? Micah suggests even considering a small conversion. Floyd brings up that when you retire, you're likely to be in the same tax bracket you're already in, not a lower bracket. Floyd uses a beautiful analogy. If you do a Roth conversion, consider it as planting a seed of an apple tree. Do you want to pay taxes on the smaller seed, or do you want to pay taxes every time you pick an apple? Micah loves diversification, not only with investments, but also with your tax plan. That way, you're not being double taxed and things like that. Make sure you know how things are going to be taxed and how these things work. Floyd mentions that sometimes he hears things that were 3 or 4 tax laws ago, and that the understanding of how things are set up today aren't always known. Floyd strongly encourages you to get your last tax return out, your pay stubs, and understand how much in taxes you have already paid. If you live in a state with state income taxes, understand how those things work too. Floyd also says that each time the tax laws have changed, they are also giving us a little more leeway each time. He has seen less and less people do a Schedule A and doing the long form, for example, because they have made doing taxes easier and easier to file. Floyd brings up that 1 out of 3 tax returns that he reviews, they end up making modifications. Floyd also brings up an example of a client mentioning that he is max funding something. When he asked them for a little bit more information about that, tell me more about that, they said, yeah, I'm doing the 4% and getting the 4% match. So to them, it was max funded. Floyd shows them how they could have saved more in taxes and doing payroll deductions with OPM because they can't just write a check for the difference. This podcast is all about action items for our listeners. Micah's action item is to run a tax calculation for yourself, and the IRS website has this available to you. Know what your numbers are so that you're not surprised come April 15th. Floyd's action item is to talk to your financial advisor about tax planning. For his clients, he loves to see plus or minus $1,000 on a return. You should have enough paid in so you either get a small refund or, just a tiny bit. Micah's second action item is to look at what you can do for Roth conversions. You should look at it every single year to see if it makes sense for you. It may not, but you should still be looking at it. Floyd's second action item is to look at your cash flow. Don't run up a credit card bill just because you wanted to increase your thrift savings plan contributions for 3 months. Re-listen to the original episode 88 to hear the amazing conversation between Floyd and Micah. And finally, share this podcast with a friend. With your help, we can achieve our goal of helping 1 million federal employees just like you. Until next time, happy planning.